seen a bit of risk aversion, it looks like, creeping back into this market. So after trading in the 680s yesterday, we're trading in the high 690s this morning. The euro also coming under a little bit of pressure against the dollar.
Morning, Stephen. Yes, we saw a bit of dollar weakness come into the market yesterday, and the euro, of course, weakened. And at this point, it looks like the rand is tracking the euro downwards this morning, probably a result of the fact that, as far as local markets are concerned, everyone's still waiting on the quarterly bulletin. So local data releases haven't attracted the kind of attention that they might otherwise have, and so the rand is largely taking its cue from international developments.
It's strange because you'd have thought that after Ireland's budget was passed yesterday, we might have seen a decline in risk aversion. Of course, at one point we had that gold price, $1,430, also falling back quite sharply as well. Why are we seeing these jitters in the market at this stage, do you think?
It is, Stephen, it is quite unusual. As you mentioned, one would have expected that after Ireland's budget was passed yesterday, we would have seen a bit of lessening in risk aversion, but that hasn't really seemed to be the case. And I think it's because debt concerns in the Eurozone are still quite high. And even though Ireland has now resolved its problems, there are still peripheral countries in the EU that everyone is now looking to and thinking that there may be problems that are yet to surface in those countries. So until there's some sort of definitive conclusion reached in the EU with regards to how they're going to tackle these mounting debt issues, I think that we could see risk aversion remain quite high.
Of course, you mentioned the quarterly bulletin, which is due out tomorrow. Ahead of that, we had retail sales coming out this morning, I think, and also we had yesterday inflation expectations survey. What came out of that you would be taking forward to that MPC meeting in January? Was it positive news?
It certainly was, Stephen. Standard Bank, our base case view remains that interest rates will remain on hold throughout 2011. But what yesterday's survey revealed was quite a substantial decline in inflation expectations for 2011 across the board. So previously, there had been an average expectation of 6.1% inflation rate for 2011, and that declined to 5.5%. And so I think that if the remainder of the data supports evidence of a weakening economic recovery, and more moderate inflation expectations could certainly cause a renewal of speculation that the Reserve Bank is going to cut rates in January.
Retail sales today, we had 6.1% growth in September in retail sales. We're getting October's number out today. Would you expect to see some momentum being built ahead of the Christmas season?
Absolutely, Stephen. If you take into account the successive interest rate cuts this year, as well as moderate inflation, it seems that household income growth has been growing quite strongly as a result, household disposable income. And so we think that would definitely be supportive of an acceleration in retail sales growth, especially headed into the Christmas season. So we'd be looking for a number in the region of 6.2, 6.3%.
Globally, not a lot on yesterday. We did have industrial production and manufacturing production coming out of the UK. Were they in line with expectations?
It was a mixed bag of results, Stephen. We actually saw industrial production growth slow in October from September's number. October's growth came in at 3.3% year on year, and that's actually lower than the 3.8% year on year that we saw in September. But at the same time, manufacturing production for the month was up 5.8%, and that was significantly higher than the previous month's growth rate, and also significantly higher than Bloomberg consensus. So a mixed bag of results out of the UK. Of course, one would expect that the pickup in manufacturing production would then play into stronger growth in industrial production looking forward.